For more insights, we're now speaking with Sayuri Shirai. She is Professor of Economics at Keio University and a former board member of the Bank of Japan. Professor Shirai, good to have you with us. Governor Ueda suggests that there's still a long way to go in reaching a neutral rate, but we don't have any new information where that neutral rate should be. What's a range that's good for the economy, do you think?
It's very difficult to explain this, but Japan is facing very serious dilemma. If you look at the domestic economy, real consumption is stagnant, and capital spending, corporate spending is really not so much. So domestic demand is so weak. So this is why you can see Bank of Japan did not make any adjustment on real GDP. However, inflation is very high, about 3%, simply because of the cost push arising from yen's depreciation. So this is the reason why Bank of Japan took action, although they were never explicit. So we have a cost push inflation, and the domestic demand is so weak. So it's very difficult for Bank of Japan to say how far they can raise interest rate.
Professor, it's also interesting to note that the board decision to raise rates was essentially 8-1, and there was one dissension by board member Toyoaki Nakamura, who is considered a dove. I'm curious to know, do you share his concern that global growth may slow and consumption may remain soft in Japan?
Yeah. Yes, indeed. So we are very much worried about the impact of U.S. policies under Trump on the Japanese economy. In case that the U.S. is going to impose tariff on the Japanese product, we will have very serious, damages to the Japan's economic performance. But at the same time, I think the biggest concern for us is that super cheap Japanese yen. So like 18 years ago, inflation was very low, and we were struggling to raise inflation. But now we have a very high inflation because of yen's depreciation. We never expected that yen would be this cheap. So we are worried if the U.S. would have a high inflation, Fed is not able to lower interest rate. So we have a huge interest rate differential, then yen might depreciate further. So that might really push up our inflation. So this is not very good. So I think Bank of Japan is very much worried about that.
The volatility of the yen hinges on the strength of the US dollar. The dollar is in a position of strength right now. So what's your outlook for the yen then? I mean, is it likely to weaken to 160 to the dollar?
Yeah, so May and July, yen against US dollar reached 160. At that time, Ministry of Finance intervened in the foreign exchange market several times. But now US economy is quite strong and it's very inflationary. So probably there's a great risk here that yen might depreciate beyond 160. So, and then because the Japanese economy is so weak, how much BOJ can raise interest rate? There is a concern here. So, moving beyond 160 is one possibility.
Also, Professor, the upward revisions to inflation are mostly due to cost push factors, higher wages, cost of raw materials, etc. Is underlying inflation strong enough to hit 2%, you think?
Yeah, very good question. BOJ say, even though this time, mainly inflation picked up because of cost push, but they also keep saying underlying inflation is rising towards 2%. But they never clarify what it means by underlying inflation. To me, if I look at services inflation, other underlying inflation is very weak, below 2%. So I don't really see any improvement towards 2%. But BOJ keeps saying underlying inflation is improving. So I think this is one of the reasons why many people feel governor's press conference is really not clear. And what is the objective of BOJ's policy? It's not really clear enough.
Professor, another headwind has to be tariffs threatened by Trump. That's still an unknown quantity. And Mr. Ueda has decided not to speculate on the scale of the tariffs, only to say that once there's clarity, it'll be reflected in policy. What's the worst case scenario, best case scenario for the BOJ to be prepared for?
Yes. So in the past, Japan was exporting to China quite a lot, about 20%. Now, US is the biggest market for us. So about 20% of Japan's exports go to the United States. So, and the US economy have been quite good over the past years. So I think if Mr. Trump will charge, say, 25% tariff also on Japan because US is having trade deficit against Japan, I think this will be a quite disastrous impact. So, I think Japan will try to do every effort to prevent that kind of situation. Because Japanese economy in the past, like last year, from January to December, Japan's real GDP growth was nearly 0%. So if we will have a tariff from US, you can imagine our economy will be not very good.
So earlier you talked about how the yen is very cheap at the moment. So how much of an impact do you think this weaker yen will have on inflation through higher import prices and earnings for Japanese exporters?
Mm-hmm. Yes. So right now, Japan's inflation is around 3 to 3.6%. 85% of inflation comes from just food and energy. Okay, so energy is related to subsidies, so it's quite volatile. But I must say 50% of inflation comes from purely food. So you can imagine this is almost all coming from yen's depreciation. So you see how big the impact of yen's depreciation on Japan's inflations, depreciation on Japan's inflations.
Professor Shirai, despite the higher prices that we've discussed, are we at that level where corporates are now able to pass on the costs to consumers? Are consumers more confident these days in spending?
Over many years, the company tried to pass on this increased, input cost on production, on the sales prices very gradually. Because they are worried about the impact on the consumers, and consumption is stagnant over these 5-10 years. So it's very difficult to pass on. So they did it over a period. And still, many companies try to pass on this past yen's depreciation and the increased import cost on sales prices. So still, they are doing it. And then large company could do it, but many small and medium enterprises, they are telling me it's very difficult to pass on, simply because consumption is really weak. So it takes a lot of time.
Professor Shirai, thank you for explaining all the headwinds that the Japanese economy is facing. Professor Shirai of Economics at the Keio University, former board member at the Bank of Japan.